Some companies will produce carbon credits and other companies will buy those carbon credits and use those credits to offset the emissions from their activities. We provide an indication here of the size of the voluntary carbon market in terms of dollars million, and we see that's expected to grow substantially. In terms of the types of projects that we see for the voluntary carbon market, there are two main categories: renewable energy, which displaces grid electricity, which may have an emission factor associated with it, and then nature-based solutions. So this would be sequestration of carbon through forestry activities or conservation of forested area. Thank you, Liz. The price of carbon is often used as an indicator for the demand for those carbon credits. Here we provide some information about projected prices of carbon into the future for different countries. In some countries, this may be a already determined carbon price, like in South Africa, where Treasury has published what the carbon tax will be all the way to 2030. We can see that the prices are expected to increase as time goes on, and this will also then improve the demand for carbon credits. Next slide, please. So the first part of generating carbon credits is to identify a suitable carbon credit project. There are a couple of things to consider when looking for a project. First of all, is there a methodology to develop that project and to evaluate the emissions from that? We'll get to more detail in a moment. Also to look at the project start date. A project may only be eligible if it started within 2 years, depending on the standard that one may be using for the project. Additionality, one needs to consider whether the project's emission reductions are beyond what would have occurred without the project. Quite often we talk about a baseline, and if you have a project, the project should reduce the emissions from the baseline without the project. There are different types of additionality. You can have financial additionality, which means that you need the finance from the carbon credits to make that project feasible. The other additionality is that your project produces real emission reductions. The carbon credit yield is also important when considering a project because you want your project to be financially viable. If you aren't generating enough credits or the price for carbon credits isn't enough, then that project wouldn't be feasible. Next slide, please. This slide provides the overall project in the generation of carbon credits. It starts off by having your project idea and evaluating whether that project's viable. One then needs to choose a standard and a methodology for the proving of those emission reductions. There's then a draft project description, which gets submitted to the carbon credit program or standard. That project then, once it's been accepted, would need to be validated by an auditor. There, the auditor checks that the actual project that's built complies with the project description. So you build what you said you would build. Once the project has been registered with the standard, it then would operate and create emission reductions. Before being issued with the carbon credit certificates, those emission reductions need to be verified by an auditor. We'll look at each of these in a little bit more detail. In terms of what is a methodology is a formalized set of rules to prove that you have real emission reduction. Next slide, please. Okay, the first thing we're looking at here is developing a project. You need to identify a suitable standard. Within that standard, you need to find out whether there's a suitable methodology. It is also possible that if there isn't an existing methodology, you can develop a new one and submit that to the standard for approval. You also need to demonstrate additionality. And that goes along with the calculation of the potential emission reductions, and then showing that there's a financial viability for that project. Next slide, please. Just some examples in terms of what's meant by the standards. So there are a list of standards there. The UNFCCC had the clean development mechanism. That's now being transitioned to the Article 6 mechanism, which is really international government-supported standards for emission reduction. VERA has the Verified Carbon Standard. That's mostly used in the voluntary market. And then we give an example here of one of the methodologies that may be applicable to the treatment of wastewater projects that you may be considering. Next slide, please. So as part of the project, before you start producing emission reductions, you need to have your project verified. The verification is an validation. The validation is an auditing process. And what the auditor does is it checks whether the project that you've built complies with the project design that you've proposed to the standard. Once that validation has happened, you can then register your project, and you can then start generating or reducing emissions. Once validated, you need to have a monitoring program in place. That monitoring program will be determined by the methodology that you've chosen, and it defines the various parameters that you need to monitor to be able to claim emission reductions. For example, have you reduced the amount of grid electricity by replacing it with renewable energy? Or what quantity of methane have you reduced from your facility? Next slide, please. There are certain costs related to the processes, both with the validation, because you need to get an accredited auditor to validate the project. And then there are also costs related to the auditing or for the verification of the emission reductions. So it's important to consider the value of the credits you may generate and the expenses related to the validation and verification and the issuance of the carbon credits. Thank you, Liz. These are different things that one should consider when you are thinking about having a carbon credit. The revenue from those credits, whether there are other income streams. Part of the additionality from a financial perspective is what sort of profit one could get from a project. Generally, the aim of the carbon credit project is not to generate profit, but to reduce emissions. within a reasonable return from the carbon credits. The carbon credits are intended to incentivize the feasibility of a project. The carbon credits can also help in terms of having a competitive advantage, and quite often this is also connected to other co-benefits of the project you may be having. There are also certain considerations in terms of regulatory compliance. Does your project meet the legal and regulatory requirements in the location that you're in? Thank you, Luz. An indication of the issuance costs. These are the costs that occur with the issuing of carbon credits with the particular standard or program that you may choose to go with. Sometimes they are specified per credit, as showed here, and sometimes there's certain thresholds depending on how many credits you would expect to achieve from the project. These costs are in addition to the auditing for validation and verification, and those costs would be due to the auditors that you use to validate and verify your project. Next slide, please. This is a very busy slide. It's just showing some of the areas where financial institutions could be involved in a project. But I think some other speakers may be giving some more information from a financial institution perspective. Thank you, Liz. And then that's it from my side. Thank you.
Thank you very much, John. Sorry, Philip, that was great. I think we'll keep questions for later. Please, everyone, note your questions down. Maybe also, if we have time left, we could go back to that last slide. I'm sure some participants would be very curious. But first of all, I'd like to hand it over to John to tell us more about how Aqua Clara went through this process and how you're doing now. What is it, 12 years afterwards?
Yeah. All right. Thank you, Leandra. I think Philip has done a fantastic job of laying a foundation on what carbon credits are. And mine is just to share our story as a company that has benefited from carbon credits. So if you go to the next slide, Los. Yeah, so a little bit about who we are. My name is John Nyagwencha, first of all. I am the CEO of Aqua Clara, Kenya. We are a B Corp certified social enterprise. We've been working in Kenya now for a little over 13 years. And what we do essentially is provide access to safe drinking water, especially for communities living in rural areas across East Africa, where access to safe water is a challenge. But sometimes, of course, that also extends to our urban centers where safe water is still not guaranteed. So besides talking about carbon credits today, I'm happy to sort out any challenges that any of us may have with safe water in your home. So happy to connect with you on that as well. So for us, I think the beginning was the motivation to look at carbon credits, first of all. And we were already involved in this market from as far back as 2012. The idea was, how do we make the products that we have, the water filters, affordable to even people living at the bottom of the pyramid? People are living on, say, less than $5 a day. How do we ensure that we build a business that is able to provide safe water access, which was a challenge, because up until that point, that was a challenge that was addressed by NGOs that gave away products for free, which was not really sustainable. And most businesses tended to avoid these types of customers just because affordability was a real problem. And so carbon credits, as soon as we heard of it, we thought was an interesting opportunity where we could utilize that revenue stream on top of the filters that we are selling, the income that is generated from that, to be able to build a sustainable business. So if we move to the next slide, in 2011 already we started looking at the possibility of getting in on the market. By 2012, we had done a feasibility study. We had a partner locally that was helping us register with a standard that Philip talked about, a gold standard. And for us, of course, coming in very early meant that we were guinea pigs for some of the methodologies that were being developed. And so it took a long time to arrive at a methodology that was going to work for us, because some of the standards that were required were not going to be possible in a rural setting. So it took around 3 years, first of all, to get the product fully set up and certified, agree on the methodology for us to start benefiting from that. Over that period, we had sold around 10,000 filters, which gave us a good foundation to generate credits, because each filter was able to generate around 4 tons per year. And as Philip mentioned, 1 ton of carbon credits is equivalent to 1 ton of carbon dioxide emission reduced. The premise for these carbon credits for us was 80% of the customers that were buying our water filters had previously been boiling their water. So when we work with a customer who is boiling water and we transition them to using our filters, we were able to quantify how much carbon emission is avoided by doing that transition. And that is what we had to prove in the baseline, go to actual households, measure the amount of carbon that is emitted when you boil 1 liter, and then every year be able to monitor and report on how much water is being filtered. And then there's a calculation that equates that to carbon credits. And since that time, of course, as I said, we have sold even more filters than this. And last year, I think we had reached around 280,000 tons of carbon dioxide emission reduced. So we can move to the next one. That's a bit of the timeline for us, but we can move to the next slide, Luz, just to share more important insights. Again, this is something that Philip has laid a good foundation on, so we can move to the next one. Yeah, just to kind of point out for other businesses or enterprises that may be thinking about setting up carbon credits, in looking at what is important to consider, for us, it was first to look at the volume of filters already distributed, because that then gives you an estimation of how many tons of carbon credits you're going to be able to generate. If it's a very small scale, it may not be viable because the cost of setting up the project may outweigh what you're going to generate. So it's important for projects that are considering carbon credits to look at the scale, where they're at and how they're going to be able to ramp up so that it's viable and profitable. Of course, what was also important is to have a very good handle of data. So the enterprise must be able to collect data to a very good level of detail. So the customer names, the location where these customers are, the contact information like phone numbers, needed to collect household population, because all these details are then important when you're doing monitoring to be able to prove that if it's water filters as it was for us, that these are actually real filters with real people and the impact is real. And then to be able to look at the processes that you have in place to collect data on an annual basis, because every year there is a monitoring activity where you get a sample of the customers. These customers are followed up on physical visits to ascertain that the benefits you claim are actually real, to look at how many liters of water being produced per filter in any given day, for example. To look at how many people are consuming water from that filter. And all this data, when collected, is then developed into a report, which goes to, in our case, gold standard. Gold Standard has a process that includes independent auditors that would then come in to verify whatever we've claimed in the reports before we get issued with a certificate to be able to trade these credits. The other important consideration, of course, at the baseline is to look at, in our case, a majority of our customers were boiling water. So there's a strong claim that when they start using our filters, we have avoided carbon dioxide emission. And so it's important to look at the geography and the area that the project is being implemented to ensure that there is a case. There's a case for carbon credits. But that also includes local stakeholder engagement at that level. So for setting up the project, it includes bringing together potential customers, leaders within these communities for them to have buy-in. Because ultimately the idea is that carbon credits is not just for us as the company that is implementing, is that these benefits are going to extend to the community. And as I mentioned in our case, the benefit to the community was affordability, that our filters were not going to be priced at a point where community members that we're targeting cannot afford them. Can go to the next slide, Luz. I won't bore you with this. I think is more or less a visualization of the steps I've talked about, from designing the project, the consultation I just mentioned, the baseline studies, the data, including keeping a good record of the customers, and then the annual monitoring that then leads to issuance. You can move to the next one. Benefits, obviously, for us is the top of the list is revenue. That was a major motivation. And in many years, carbon credits accounts for around 50% of our revenue. So it is a significant revenue stream for us. There is, of course, a question, and other speakers will talk about the sustainability of the carbon market. We've seen in the recent past, sometimes there are fluctuations in prices. So we're also cognizant of the fact that we can't build our business entirely on carbon credits. But while we have carbon credits, the idea is how do we tap into that market, maximize the opportunity, and then utilize the revenue to be able to build a more resilient business, including diversification of our products. What we are doing currently, for example, is introduce a water filter for people who are maybe in the middle class or living in urban centers that want something that is more aesthetic and are willing to pay more than the rural folks would pay for it. And so ultimately, carbon credits will enable us to invest in research and development to have other revenue streams that can enable us to be sustainable. The other one is strengthening our customer support, because carbon credits enables us to develop very good data practices. It has ensured that we have an incentive to work more closely with our customers than a typical business would, because if our revenue was just selling filters, that would be possibly the end of the relationship. Once somebody buys a water filter from us, we are not really going to be too bothered about whether they're using it correctly and how they're using it. But because there's that additional incentive, we make sure that for every person that buys a filter from us, they are supported to use that filter for as long as possible. So that may include repairs and maintenance, which ultimately is good for the impact that we're looking for, which is people having safe water, not necessarily people having filters. And then it's been helpful to have some of the data we collect through carbon credits for our efforts in looking for investment or for reporting. And the fact that we're able to quantify how much carbon emission is reduced by our operation has also been beneficial in some of our other engagements as we mobilize for resources. I think we can move to the next one, if there is a next one, I'm not sure. Challenges, quite a few of them. Again, I won't get into that too much. I talked about fluctuation of prices in the market, so that's something you have to work against sometimes, is how do you ensure that your business is not going to suffer if the prices change significantly, as they sometimes do. Sometimes there's also changes in procedures and the methodology can change, and that has affected us in the recent past especially. There is more scrutiny now for carbon projects than there was before, which ultimately is for the benefit of those that are doing good projects. But sometimes that also means that good projects can be punished because of the sins of so-called bad projects. So methodologies can change and become more stringent than they were before. So it's been a bit of a challenge sometimes when you have projections that then you have to change quite frequently. Maybe the last slide, those. Yeah, so the opportunity we see, of course, from our end that there is demand growing for carbon credits. I would say this last year, 2023, in Kenya, for example, there was a lot of excitement, and even the government now woke up to the possibilities of carbon credits. I'm not sure that's necessarily a good thing, but there's a lot of interest now in this space, which means for projects like ours that are generating credits, we hopefully will see more demand. There's changes in technology, and that is also helping us track things like data more efficiently, connect with our customers more efficiently. Ultimately, also, we are looking at a linkage between, for example, water filters and our carbon credits with companies that want to offset. It's something hopefully that will become a thing in Kenya as well, with our companies, including your companies, looking to offset the carbon emissions that you generate. And there is an opportunity, because we belong in the voluntary market, to work even locally with some of these companies. And the other opportunity that is not here is possibly for financial institutions. How can companies like us that have these carbon credits already, we have track record, we have commitments sometimes from clients, how can we utilize this as perhaps collateral to get financing from our banks and microfinance institutions? That's why I like the question at the beginning. Is there openness from our financial institutions to look beyond, I think, the typical collateral we look for and opportunities we look for, and start looking at carbon credits as one way to de-risk loans to enterprises, which can enable us to accelerate and grow even faster and further than we are doing. So let me leave it at that. I don't want to talk too long, as I tend to. So back to you, Leandro.
No, thank you, John. At least for me, this was very good to hear this from a practical perspective, and I hope also for everybody else. Yeah, now I'm very much looking forward to hear what Dominique has to say on the future of the carbon markets, and also what TASC is doing in that regard. Please take it away.
Fabulous. Thanks, Leandra. Thanks, John, Philip, and Luce as well. So hi, everyone. My name is Dominique Hayward. I am a business development analyst at TASC, also known as the African Stove Company. Just to give you a little bit of, next slide, please. Always get that. Just to give you a little bit of background and what we do, we're a leading global carbon project developer with combined senior management experience of over 100 years. And in fact, our directors started the first cook stove carbon project in sub-Saharan Africa under the CDM, or the Clean Development Mechanism. And this was in Zambia. And now, fast forward to present, we've distributed over 1 million devices, be it cook stoves or safe water systems. We have over 250,000 hectares under management, and we've issued more than 2 million credits. And a few things that we specialize in, we really emphasize the full suite of implementation of carbon projects. So this is from sourcing funding, conducting feasibility studies, implementing projects, and then in assuring a very hands-on approach to the management of these projects. And then we also conduct all of the marketing and selling of the credits, both in voluntary and compliance markets. Next slide, please. So really what I wanted to get into today is financing against an ERPA, or an emissions reductions purchase agreement. So we've been very lucky to work with two different kinds of financial institutions that have aided us in bolstering and furthering our operations. So our first deal was completed with Bix Capital, which is a Dutch impact investor, in early 2023. And the background behind this was that we wanted to expand our operations within Zambia, and Bix wanted to get some exposure to the carbon markets. And we found that obviously this was quite a match made in heaven. But more onto the deal, unlike our current JV partner, who would rather receive repayment of the loan, interest, and a share of the carbon credit revenue, Bix wanted only a repayment of the principal and the interest resulting from the sale of credits at a floor price, which was stipulated in the ERPA. The ERPA was then signed between Bix and TASC Parent Co. And then this mandated the creation of an SPV, or special purpose vehicle, to which Bix then loaned the money. And this meant that we could expand our existing project by 68,500 stoves. So now onto the second deal. This was completed with Standard Bank in Q4 of 2023. Standard Bank provided $10.6 million worth of senior debt financing at a favorable interest rate to TASC. And this enabled us to increase our liquidity and repay our existing project loan earlier. Indirectly, it actually improved our cash flow and was a key driver for the expansion of our South African cook stove project, making it potentially the biggest cook stove project in sub-Saharan Africa. However, of course, this was also mutually beneficial, as it also allowed Standard Bank to gain some early exposure to the carbon market and made it the first carbon credit project to be financed by a commercial bank in South Africa. Next slide, please. So if you were interested in gaining some exposure to the carbon markets, here is really a breakdown of a few international markets, as well as the volume of credits used within them. And this is now historical market activity. So some of the markets here, like the EU ETS and the REGI markets, are compliance markets, but they allow, or they did allow in the past, the use of credits towards achieving the decarbonization strategies of the companies who are subject to these systems. So for example, in the EU ETS, it's an allowance rating system, but previously companies were able to use historic CDM CERs, which is the emission reductions generated under a CDM project, for their decarbonization towards their allowance. And generally these credits were cheaper than the allowance. So it made business sense that if you weren't able to buy allowances, you could buy credits. For example, the REGI initiative, this is still allowed, and this is obviously a market in America. And so from here, you can see there's quite a lot of numbers on this slide, but basically I want to emphasize that the combined use of credits in these markets has been around, let's say, 2.6 billion tons at varying price ranges. And while this is substantial within itself, when you consider that BCG, or Boston Consulting Group, reported that the carbon market was worth around $2 billion in 2021, they anticipate that the market is going to grow between $10 and $40 billion by 2023. So visually, this would require multiplying the credit usage that you see on the screen now by 5 times. And this is to be conservative. This is at the lower bound of the range. If you're feeling really generous, you can multiply it by 20 times, and that would be fine now the upper bound of the value. So to give an indication, this would upscale what you see here by at least 5 times in only 6 years. Now, looking to the next slide. So these are the markets where we believe this forecasted demand is going to come from. From right to left, on the very right-hand side, it's the expected demand arising out of Australia's compliance and voluntary schemes. This is expected to be around 296 million tons. And thereafter, we have demand arising from the South African carbon tax at 162 million tons. Then we have demand from CORSIA, which is the carbon offsetting and reduction scheme for international aviation. And this is coming in at around 1,200 million tons. It's followed by the VCM, who sees demand growing to 1,500 million tons. And finally, we end with a whopper of demand at 3,200 million tons. and this is from Article 6 markets alone. So now, do we rarely see this happening? From my personal experience at COP, I was very lucky to go, and I came back feeling extremely energized, tired, but excited and energized. And while the negotiations around the multilateral trading mechanism, which is Article 6.4, they didn't necessarily reach the conclusion that we were hoping for, I found that the interest in carbon markets as an effective tool to decarbonize was most definitely there. The carbon markets are alive and well, they are not going anywhere. And in fact, I found that the lack of development under the Article 6.4 mechanism led to a kind of emphasis on the voluntary carbon market as well as the Article 6.2 market. And one thing that I also found most interesting, is the excitement of host country governments to become involved in these markets, to become educated, and to see really where their place is in this whole big world of the carbon market. So just to conclude, I think really this slide vividly shows the scale and the growth potential, as well as it emphasizes the necessity of credits. We need to decarbonize, we need to do it in some way. They are hard to abate sectors who will take years to do it within their supply chain, and credits offer a verifiable way to do that. So in terms of accessibility to both private and public sectors, as well as governments, it's an incredible tool to do that. So yeah, thank you so much.
Well, thank you, Dominique, and thank you again to all our speakers. I think this was lots of information. Yeah, my head is very full from it. I hope our audience also enjoyed it, and we'll go to Q&A in a second to hear. You have some urgent questions for our presenters, please type them in the chat box. Maybe the presenters will want to show their faces one last time. And yeah, I'd like to ask you the same question on, would you recommend an FI to allow carbon credits as a collateral? I guess this is going more to Philip and Dominique, but John, also if you have an opinion.
Philip, are you going to take this one?
What's this list of criteria that you would recommend a bank to check on?
I think there may be some larger questions in terms of what's actually being invested in a project. So the carbon credits may be a smaller component of that because it helps pay for that capital that's being invested. So the banks may want more surety, particularly when what happens with the carbon credit projects is that there's lots of capital investment upfront and costs associated with validation and verification. It's only really at the end of that process that you get carbon credits. And so the banks may be reluctant to take the carbon credits if they then have to take over the project and manage what's happening there.
Yeah. Dominique, would you like to add something?
Yeah, sure. I definitely agree with what Philip said. And I think, from an FI's perspective, education is your partner in this, educating yourselves on the carbon process and what it takes to manage a carbon project so that you can kind of walk hand in hand with the developer that you're working with. And what's coming next. And, maybe you use certain milestones like registration, like a verification, those kinds of things as the milestones for your capital injection. But I definitely think, ensure that there's reporting back to you so that you are fully aware of what's going on. And as I said, I can't emphasize education enough on this. Make sure that you know exactly the ins and outs of a project and how it can be the most successful and how you can be a part of that.
Thank you. Yeah, I have one quick question before we go into the two questions that came from the audience, is if maybe more from a project perspective. So we hear, okay, there is lots of things you need to consider if you want to get your registration done. Is there an easy way to do a quick check? Is my enterprise somewhat eligible? Do I have a chance in getting certified and getting through the methodology? How would I go about that?
Perhaps if I can add there, some of these methodologies are very specific in terms of what they require from the monitoring perspective. And deviating from those monitoring methodologies can really create a very big headache. So making sure that you comply with the requirements of the design of that project from the beginning is very important. It is possible that you can make changes along the way. It's called post-registration changes. But there are additional costs associated with that because you may have to have those changes validated. And then also you need the correct technical solution to be able to propose changes. So, and that requires the technical assistance and know-how of what may be possible or acceptable to the carbon program for changes to your monitoring.
Okay, thank you. See, we're running out of time and we actually have some questions. Maybe let's just take the first one, and I'm not sure who of you wants to answer this. And then I know there is one question to John, so I'd also like to take that. So let's take these two questions and see if we can get them done. The first question was from Victor on the sustainability of the carbon markets. Are the prices per carbon credit likely to come down with more carbon products coming to the market? I don't know, maybe Dominique, this would be something for you.
Yeah, sure. Thank you. I mean, if I had a crystal ball, I would definitely tell you, but I think our sentiment towards it is that because credit quality is becoming so important, there might be a stratification in the pricing. So you will get your not so great projects would be charging less per ton, but then your projects that really emphasize integrity and quality, they generally go into a lot more, their efforts are a lot more. And so they have a tendency to charge a higher price. So in that respect, I think that it could go both ways. Price is not always an indicator of quality, though. I'm going to put that out there. But I do think it is also going to increase with the legislations that are coming around. For instance, as I mentioned, CORSIA, Article 6, the carbon border adjustment mechanism that's now been launched in Europe and is going to be launched in the UK, requiring anybody who's importing goods to have paid a similar price as the internal carbon price in the country of origin. So, these kinds of compliance systems are expected to bolster the price because we're going to have more buyers flooding into the market. And they are only, yes, the number of projects are increasing, but they are only so many. So I think, it could go either way, to be honest.
Okay. Well, thank you for that. And yeah, I'll have this question to John asked. And I think this is quite nice because it sums up the topic of this conversation a lot. Did you use or try to use your carbon credits to access a loan from a local bank or MFI? Did you have any discussions, conversations in that regard? And if so, how did they go?
Oh, that's a great question. Not really. I think is something that I've been thinking about, especially in the phase we are in now where we are scaling. It's been possible in the past to get investment directly from some of our partner carbon development companies. But yeah, so we haven't tried that out, and it'll be interesting, I think, to have conversations with our banks here in Kenya, especially after this webinar, to see whether there's more appetite for these kinds of discussions. But at this point, I can't say we have.
Okay. Thank you very much. There is more questions coming in, but we're out of time. I think feel welcome to reach out to any of us if you want to continue the conversation. And with that, I'd like to thank our presenters again. Thanks, Dominique, Philip, John, for giving those lovely presentations and sharing your knowledge with us. And yeah, I'm looking forward to see how this all develops, and speak to you soon or later. Bye-bye. Thanks for joining, everyone.